So with investing, we also need to be wary of tax and legal considerations. These are things which we have to know about so we don't owe a lot of money. Let's talk about the tax implications of crypto investing. Now, crypto can have tax implications and basically they are subject to tax laws. So let's educate ourselves on this. So for an example, capital gains tax is a type of tax which is placed upon any gains made from the sale or exchange of crypto, and it depends on how long they're held and a country's specific tax laws. But until it's sold, it's not subject to tax, which is why you see people like criminals or just general people who don't want to pay tax holding onto their crypto and not selling it, because until they sell it, it's not subject to capital gains tax. But that's not a reason to hold on to it, because if you hold on to it forever, you don't actually have any money, right? So that's something to take into consideration. Then we also have income tax. So income tax is applied to crypto, which is issued as a payment for goods and services sold, and this is dependent on the value of that crypto or the value of the crypto at the time. Now, if you have a business which is actually operating on taking payments via crypto, then you are getting paid for a service, which subjects it to that type of tax. Some businesses, and like I said before, some criminals, they take crypto payments low-key and then don't report them, but technically this is illegal, okay? Because if it's not a personal investment and it's a business incoming, then income tax is applied to it, or should be, okay? So try not to avoid this, because eventually you might get caught. Then we have record keeping. Record keeping is very important when it comes to tax, okay? Because we need to keep an accurate record of all the crypto transactions which we make, the date of the acquisition, the purchase and sale price for them at that time, and other metrics important so that we can calculate the capital gains tax we need to pay or report the losses which we make effectively on our tax return. So when dealing with crypto or large numbers of cryptocurrency, make sure you accurately report it and take a record of it, because otherwise you'll be confused later and you might under or overpay your tax. And of course, when it comes to tax, reporting requirements are obviously going to differ. This is based on your jurisdiction, where you live, and the location, as certain tax authorities around the world may require you to report your holdings, and they could also issue penalties and fines if you fail to do it. Tax deductions obviously can be applied on some expenses related to crypto investments. So when you have a business, you have tax deductions. So if I buy something with my business funds for my business, I put it as a tax deduction on my tax return. It's the same with crypto, right? So if you have expenses related to crypto investments, such as your expenses for mining crypto or buying a mining rig for mining crypto for a business, and storage fees, for an example, these might be tax deductible and you might want to look into that.